In this video, we're going to confront the question of whether the bull market in US stocks has ended. In doing so, we're going to take a look at the S&P 500, look at both sides of the market, some of the key levels and potential scenarios moving forward. I think the market is presenting a lot of risk right now, but there are a lot of mixed signals depending on which instruments you're looking at. So that's why I wanted to make a video and show three different charts that are actually showing three different kinds of patterns and how it can be tough to put all this together, but we're going to do our best in this video to do that. The second chart that we're going to look at after the S&P 500 is Tesla, which is one of the most popular stocks that's included in the S&P 500. And lastly, we're going to take a look at the updated chart in Bitcoin. So if any of these charts are of interest to you, then stay tuned. All right, so here is the S&P 500. Since my last video, my financial forecast, we have continued lower. And in that video, I talked about how my perspective on the US stock market is that we're going to have a very, very key top in 2022. I think this 13-year bull market is in its extreme late stages if it hasn't already ended. But the question is this the top? And right now, I'm not exactly sure. And I'm going to share exactly the different scenarios here and some of the key levels. First of all, the count. I think this is an obvious wave one, wave two. Now the question is, where do you count wave three? I think the cleanest count is counting wave three right here and then going wave four and wave five. And that would suggest that this bull market is over. We have already violated below this key level that I was talking about in my last video. And I was saying that was going to be a very big warning sign. And we pierced below that, have continued higher, and then are resuming this decline. And the question is, how far is this decline going to go? And is this just the start of a very, very big bear market? And that's kind of the question. You could count this in a couple different ways. This is a kind of ugly end to the trend. You could also count wave four's ending right here, where we have this kind of running triangle pattern. Now, if you look at it on this chart, this high is actually above where you would put wave C of this running triangle. But if you look at the cash index, this high actually stays below that. So that's a valid count for that when looking at that specific chart. But either way, you could count this as a complete 5-wave pattern. The other scenario is where this is all just wave three, and we are currently in a wave four. And that's entirely possible. And the reason why it's possible is when you look at the short-term count, which I'll show in a second, it doesn't look particularly impulsive yet. Now, it could just be in its very, very early stages, setting up for a massive crash. And that's definitely a possibility. But I'm fairly just kind of trying to be as conservative as possible right now and not really out there taking on a lot of risk given the lack of clarity. Now, again, clarity will be found once this level right here is violated. This is the wave one of five high, and this is at around 35.88. Now, again, that's a long way away from where we're at now, about 17, 18%, give or take. But that will, give clarity once that's violated. But obviously, we'd like to know if a bull market has ended before that. So this is the potential count. This is the alternate count. And the bearish count is right here, that the bull market has already ended and we are starting a bear market. Those are the two scenarios. I'm not exactly sure which one is it, especially given some of the other charts out there. And I'm going to show you one, which is Tesla, which does not look like it's topped yet. So that gives us some conflicting information. But let's go ahead and look at the shorter term count here on the S&P 500, since I haven't covered this on my Instagram and Twitter in a while. And you can see here, this looks like a 5-wave decline followed by a correction, followed by another 5-wave decline. To me, this doesn't really look like a 5-wave decline, which means it could be one of two things. I mean, technically one of three things, but I don't really favor one of them. The one that I don't favor is that this is 5 waves, and this is just the start of a larger 5-wave decline, where this is all wave 1 right there. And I think this high was taken out 94, 90, yeah. So wave 2, and now we're starting a massive wave 3. To me, this doesn't look like 5 waves, so I want to count that as as a wave 1. To me, it would be cleaner to count this as wave 1, wave 2, wave 1, wave 2, and we're starting the series of declines that would result in a massive crash. Now that's the risk, and it's pretty valid as long as the S&P 500 holds above this high. This is the February 2nd high, and I think that would be a really bullish sign if if the S&P 500 is able to get back above that level. So that's kind of the bullish level here. And until that level is taken out, I am a bit bearish on US stocks, obviously, like long term, extremely bearish, but short term, still not 100% sure. But the risk is definitely there. Now, as far as if this is a wave 4, it could easily be interpreted as a double zigzag. Now, again, I don't love the count in context to the larger count going back to March of 2020, but it could be this kind of 5-3-5, where this is all one zigzag, and we have this kind of double zigzag where this is W and this is X, and then we're going down in a wave Y, where we will take out this level right here. And I do favor this level being taken out. This is at 42.22. I think that's very likely that that level will be taken out. Nothing's for certain. And if we break above this 45.96 level, then that point will be rescinded. But that's kind of what I'm looking at here. This is the bullish interpretation, in which this would be a 3-wave complicated correction, and we continue on for one last all-time high that would run through at least middle of the year, something like that. But of course, since the risk and the long-term count points to this being a very, very significant all-time high that's leading into the early stages of a massive bear market, probably not one of the magnitude that we've seen since at least 2009, or probably the bear market stretching from 2000 to 2009. And I personally think it'll probably be the biggest one that we've seen since the bear market following the Great Depression. So I think this is going to be really, really, really big. The question is when. And to me, this count is valid. But so far in the short term charts, it's not really showing an impulsive kind of decline yet. So I'm ultra short term bearish, medium term, not 100% sure if this is just a wave 4. So we'll see about that once clarity is found, and I'll try to make another video. But that's where I'm at right now. Now, to increase the reasoning here for my kind of uncertain outlook is Tesla. And I'm going to share this real quick. The decline here looks like 5 waves. 5 waves. This is a 3-wave move up, and then we had another kind of impulsive move down. Wasn't that clean, but we know that this is going in the larger direction of the trend since it broke below this low right here. So 3-wave decline followed by a 3-wave move up, followed by another decline. So the question is, here's the all-time high back in November 2021, right around when the US indices started topping out. The question is this the all-time high and we're starting a large degree bear market in Tesla? To me, when just looking at this chart alone, this doesn't strike me as an impulsive move, and for many different reasons. First of all, we can look at the overlapping nature of this move, but there's also a really, really key point about this chart that I think a lot of people would miss, and that is that this move right here made a new swing high above this key high. Now that's really, really important, and to me, I think increases my conviction that Tesla has not made a long-term top here by a substantial margin. And the reason for that is that if you're counting this, let's say this is a 5-3-5. Okay, sure. Okay, that's a corrected pattern. Okay, well, let's say it's a series of ones and twos, right? And this is a wave one and a wave two and a wave one, and we're starting this descending kind of wedge before a massive crash, right? Well, if you were to count this internally, this would have to be wave one, this would have to be wave two, this would have to be another wave one, and this going up and making this new high would invalidate this count. So then you'd have to say, okay, well, this is wave one, and then wave two formed an expanded flat, A, B, C. Now, there are two things wrong about that. Wave twos usually don't take the form of an expanded flat. They're usually a zigzag. And second, if you were to subdivide, if you were to look at the internal count here of what would be wave C of two, this is three waves, A, B, C. Wave C's always take the form of 5 waves. And also, not to mention that if this was the count, then this A, B, C, and let me just write it out so that it's very, visibly clear to those trying to follow along. This is completely disproportionate to this wave one right here. Wave two would be like 5 times larger than wave one from in terms of duration. So I don't think that's a very good count at all. So given that my preferred count right now, and specifically looking at Tesla, is that Tesla's forming a double zigzag pattern. And I think that's looking something like this, where we have a 3-wave decline, a 3-wave move up, it's clearly a 3-wave move up, that did not make a new high, and then another 3-wave decline. Now, this count going from the decline is not very clean. You could make the case that this is already bottomed and this is A of Y, B of Y, C of Y, or this is stretching out in a larger double zigzag where this will be all A of Y and this is B of Y, and then we're going to go down and C of Y, or B of Y could even stretch up and then we come down again. So it's not very clear, but the key for me, the key takeaway for me after looking at this chart is that it doesn't look like that Tesla has made a long-term top. Now, this decline could continue for another, 3-4 months. I have no idea. But that's kind of the key. It's very likely, to me, it's like a 50-50 that Tesla makes another low. It wouldn't really change the larger point of this chart. But what I'm taking away from this is that a very, very big cap stock doesn't look like it's topped out yet in its bull market. So if that's true, and Tesla still has more highs to go, likely in 2022, but regardless, in its larger bull market, it would be hard for me to believe that the S&P 500 is going to be in the midst of a bear market and probably crashing. I don't really see Tesla making new highs while the S&P 500 is, and the larger US stocks are crashing. I don't see that very likely. So a little bit of conflicting information here. It just shows that you have to take everything into context and not try to make conclusions by looking at one thing and assuming that for another. Everything has its own kind of trend going on. But that's kind of my perspective on this. I see a lot of risk right now in the US stock market, but we also see other stocks showing some potential upside, which suggests that there are other possibilities right now in the US stock market. And that's what I'm trying to keep my eyes towards, that, hey, maybe this wave 5 is still not over and it still has more highs. But, personally, when looking at the S&P 500, it's really a coin toss for me. And again, to me, the risk doesn't satisfy or justify taking on, a large position in the US stock market or in some of these index funds. They're extremely, extremely overbought. And when I say that, that's saying it in a nice conservative way. I mean, we're talking, 1929 kinds of 1929 kind of overbought. And even that doesn't justify it, because this is nowhere close to how big of a bubble 1929 was. Maybe proportionally, given that the culture wasn't so shifted to equities as it is today. But in terms of bull markets that are dangerously overbought and overextended, that's where we're at. And the question is whether or not there's a last hurrah and this wave 5 is going to continue to extend out, which is already disproportionately large to wave 1 that took place from like March 2009 to like April 2010. You know, that was like a little over a year. We're getting close to 2 years now. Now, it wouldn't be 2 years, it'd be like a little over a year and a half if this ends up being the top. But if it's not, then obviously this is going to stretch out past March of 2022. And now we're getting into, you know, double the size of wave 1. So, you know, crazy stuff when looking at the larger count. But again, I am extremely bearish, but trying to keep my eyes open until there's actual confirmation that that long-term trend has shifted. And right now I'm seeing mixed signals in some of these stocks that don't yet look like they have topped out, while the S&P 500 looks a lot more bearish, in my view, compared to Tesla. Tesla, to me, I don't really see a very convincing count here to that would lead me to believe that this high will not be taken out for the next 5 years, right? Compared to the S&P 500, if this is the top of wave 5 of 5, probably of 5, you know, we're talking decades and decades and decades, then yeah, this all-time high is not going to be taken out for a very, very long time. So that's why this is a very significant kind of topic. And we're at a very critical juncture, as it seems like we have been in many times over the course of the last year. But here we are. Lastly, I want to take a look at Bitcoin. So Bitcoin, I've been a little bit better about updating on my Instagram and Twitter. It's been making some wild moves. So, and the structure is a lot cleaner compared to, let's say, the S&P 500. Here we are. So in my last video, we were still coming down here in what I think is now even more strongly a triangle, a running triangle pattern. So this is the pattern that I think is taking place. This is the same pattern I talked about in my last video, but I figured I'd go ahead and update it here. And I think we're going up in a wave D. Now, currently, we're actually having a pretty strong decline that actually broke one of my short-term counts that I posted the other day, but the larger pattern is still intact, like very intact. Now, the reason why I'm actually quite confident about this setup is because the internal count, as well as the long-term count, is really, really clean. Again, I think this is a wave 4, and I don't think this wave 4 will end anytime soon. I think wave 3 topped out right around here. And this is wave 3 of a larger 5-wave pattern that started at the end of 2018. So this is not anything that's been happening. You know, this is not any kind of new pattern. This has been a pattern. It's a long-term pattern that I'm looking at. And then I think this is going to be wave 4 whenever it bottoms, and we will be going up in wave 5. Now, there's some really key levels. First off, the entire pattern that I'm talking about will become invalid if we break below this level, 28,800. It depends on which exchange you're looking at. The prices will vary, but this is the June 2021 low. That level is crucial. If that level is taken out, then the entire this entire pattern is completely invalid. It's not the right count. It could be something different. It doesn't mean that the bull market's over, but in my opinion, it would increase the probability that the bull market's over, and that this pattern, because this pattern is the best bullish count that I see. So that's that. Another key level is this January 24th low at about just under 33,000. This is another really, really key low. If this level is taken out, I would begin to also, even though the larger count wouldn't be broken, I would begin to feel that the likelihood that it will eventually break is heightened because of the internal count of this wave C right here. I think it's a really, really clean count, and I feel very strong about it. It looks like a double zigzag pattern, and I actually posted this chart right here. This was on the day of Bitcoin's bottom here on January 24th, showing the internal count that I was looking at the day of the low, and it looked like it was very likely to bottom right around there, maybe one more low, but it ended up not even making another low, and that count ended up remaining correct. Now, this count was a little bit funky because I forgot the labels right here, but the clean chart is right here. If you like click that a couple times, it'll come up right here. And I, kind of explain in more detail in the caption of this post. But the point is, this is a really, really clean count, in my opinion, of a complicated correction. And to me, it does not look impulsive, which is good, because that means it's not going in the larger, the decline was not going in the larger trend, So to me, as a current Bitcoin bull, I'm glad that it's not going in the larger direction of the trend, or at least that's what the chart's telling me. And I would that would lead me to believe that this low is very significant, because if we make another low below this, it would be very difficult to count. So I would like that low to remain intact as a Bitcoin bull. If that level gets taken out, begins to get a little bit fuzzy, and the last line of defense is this 28,600 or 28,800 low. Now, as far as the short-term count goes, if we break this down to a 4-hour chart, we're having a pretty significant decline here. And I'm looking at this as another kind of corrective pattern taking place. To me, this looks like a 3-wave move up. 1, 2, and 3. I was thinking it topped here, but we've ended up making another low, and I was counting this as an A, B, C, something like this, as a W, X, and Y, but that ended up not being the case. And now I'm looking at this as possibly a zigzag pattern before we make another move up. And this is just looking at the internal count of wave D going up. I'd like to see this level right here, this low on February 3rd, remain intact. But if we break below it, it's not the end of the world or anything, but the count is still valid. But this looks like it's taking the form of an impulse, which leads me to believe that this is some kind of zigzag pattern. And I don't think this low should take this level out. If it does take this level, the 33,000 level out, then that's a very, very big concern to the legitimacy of the larger wave count. Again, I don't think this is going to be the move that leads to new all-time highs in Bitcoin. I think this will be a move that likely at least takes out the 52,100 high over here that was registered at the end of December. And I think it'll likely get between the 54,000 level and the $61,000 level. I share why I think that in a lot of these other posts, in this one specifically, looking at some Fibonacci measurements and whatnot. So if you're interested in my short-term analysis on Bitcoin as things continue to update, I share a lot more posts in a more frequent manner on my Instagram and Twitter, and the links to those are in the description below. So I figured I'd make a pretty in-depth video. I'm going to be traveling a lot and out of town for the next month, so I wanted to make an update on the S&P and a little fun look at Tesla, which looks like it's forming some kind of corrective pattern. I'd flip a coin whether or not I think it's going to make a new low. We'll see. But again, the larger takeaway here is that the pattern at least suggests a higher likelihood of new all-time highs in Tesla within the next, let's say, year or 2 years. Could be sooner. I'm just saying that to, I'm not saying, oh, Tesla's going to be making a new all-time high tomorrow. It just means that this pattern doesn't look like it's suggesting a larger move down, or that this high is like a 10-year top, whereas the risk to the S&P 500 is that this is like a 10-year top. And right now, these short-term patterns are showing different things, and the question is how will they continue to form. The S&P 500 and the larger US stock market is in very, very big trouble, lots and lots of risk. But again, to me, it hasn't yet confirmed that the bull market has ended, but the risk is definitely there, and extremely large amounts of downside is ahead. The question is whether or not it's immediately ahead, or if this market is going to continue higher eventually, holding above this wave 1, and this being more like a wave 3, this being the wave 4, wherever it bottoms out, and then a wave 5. It is yet to be seen, but when there's more information on that, I'll do my best to make a post on Instagram and Twitter, and hopefully make another video here when I get a chance. So anyways, I'd love to hear your thoughts about all these different markets, where you see them going, what you think about the Bitcoin pattern, because personally, this is the pattern that I find the most intriguing right now, and I feel like has probably the most upside opportunity in the next year. So it's going to be very, very interesting to see how this one continues to trace out, and I will definitely be making periodic updates. It'll be busy a little bit. That's why I wanted to make this video, but I'll do my best to do some timely updates on Bitcoin, hopefully catching some more important bottoms and highs in the future. So yeah, please, I'd love to hear your feedback, what you think about these markets, where you see them going in 2022, and I will see you all next time.